Hey guys, what's going on? Jeb here, and in today's video, we have to get back to the kind of nitty-gritty of the real world, because instead of making April Fool's videos about toilet paper, which was a very fun video to make, right now, we need to report on something very important going on in the real world. You see, the United States Labor Department has just reported their unemployment claims for the previous week, ending on March 28th, and the number is staggering. And by the way, I know a lot of you guys have been asking me, hey Jeb, not all of us are in America, why are you only talking about American news? Number one, I'm American. Number two, America is the global leader of the economy, so everything that happens in America is likely going to be happening in your country as well. And as we've just seen reported, during the last week, more than 6.65 million people filed for unemployment benefits. Now, by the way, other than the last 2 weeks, which have collectively seen 9.95, nearly 10 million filings for unemployment, the highest week for unemployment filing in American history was in 1982. I believe it was in October, when we saw 600,000 file. That is a staggering number, putting our unemployment rate at probably around 10%, up from 3% 3 weeks ago. So guys, number one, we're going to be diving into that news because it is very important, and after we get done with that, I actually want to show you Bitcoin and some of the other markets, because the stock market is not reacting very healthily to this news, but Bitcoin is actually looking damn skippy right now. Now, after we get done talking about this news, I actually want to move on to Bitcoin and the stock market, because the stock market is not doing well in response to this, but actually, Bitcoin is doing very well in response to this, which is definitely not the response that we were all expecting. We were going to be talking about that later on in today's video, so if you do enjoy today's video, consider hitting that like and subscribe button. But without much further ado, guys, let's go ahead and dive right on into it. Guys, I believe it to be relatively well known that unemployment rates are one of the primary indicators of the health of an economy. For example, America's unemployment rate, as reported anyway, was around 3 to 4% before this whole crisis started. Other countries such as Spain had a 14% unemployment rate before all of this. Of course, the lower the unemployment rate, the better. That means that more people are in the workforce, more people are making money, more people are able to support themselves, more people are not on government assistance, and in general, the government and the economy is far healthier because the citizenry is financially healthier. It's when you have massive spikes of unemployment, as you saw in the 80s with that recession, in 2001, in 2008, and now in 2020, that you start to see problems in the economy, because when there's disruptions in the labor market, when there's disruptions in the workforce, it can very easily spiral out of control if the government doesn't step in or if the economy doesn't prop itself up in other ways. The news batters U.S. economy as 6.65 million filed for unemployment last week. Almost got me there. More than 6.65 million people filed for unemployment benefits in the United States last week. The latest official figures to highlight the devastating economic impact of the news on the American economy. As reports emerged of long lines at unemployment offices, jammed phone lines, and broken websites across the United States, the Federal Labor Department said on Thursday that the new record number of people sought benefits after losing their jobs in the week ending on March the 27th. Last week was by far and away the worst week for unemployment claims in the history of our country, and we just doubled it in this previous week. One last thing here, former chief economist at the U.S. Department of Labor, Rogers, calculated the U.S. unemployment at 3.5% in February. It has already reached 17% in just 2 weeks. That is unprecedented. That is very bad, and assuming that this drags on for much longer, there are going to be lasting ramifications on the economy as a result of all of these shutdowns and all of these slowdowns in the economy. Every single industry, more or less, except, the toilet paper and the hand sanitizer industry and the food production industry, are in very big danger right now. Luckily, the administration and the Congress in power right now are working very hard to fix that. Hopefully, for once, we can trust our politicians, but we're going to see about that. What concerns me is how many of these people are going on unemployment right now because they are actually fired and gone and done for good, or that they've been laid off for a few months, because many people that I know of right now have only been laid off until these businesses are able to reopen, and then they're going to be rehired. So many of these people are actually only unemployed temporarily, and when the economy does bounce back, hopefully a very large portion of you guys and them are going to be able to get those jobs back because they were only a temporary layoff. That is where a large portion of this number is coming from. We, of course, can't know how much of that is happening, though. The more the better. No matter what happens here, guys, April is going to be a difficult month. May is going to be a cleanup month, and after that, things are going to start getting better. So, with all of that said, I brought you the news. Let's go ahead and talk about its impact on our markets. I'm going to start with the stock market, then we're going to briefly touch on the oil market, and then we're going to get to Bitcoin. You'll see why I'm doing that here in a second. One thing that I've seen very interesting happen on the stock market is that over the last couple of weeks, ever since about the 23rd, the stock market has actually been bouncing even after that news of a gigantic increase in unemployment happened back on the week ending in the 21st. But unfortunately, what seems to have happened here is that the SPY and I also believe the Dow Jones have rejected at their 20 daily exponential moving average, which is of course where we were getting quite a bit of support previously. Following that, we have started to reject and we were trading sideways. Now we're pulling back, probably as the market starts to respond to this news of unemployment. And just to keep everything in perspective here, from top to bottom, we pulled back nearly 40% in the span of 40 days. That is definitely the largest correction in a decade, and by the time this is all said and done, might even be worse than the 2008 financial crisis as far as the impact on the stock market is concerned. There's no doubt that this is an even bigger economic crisis, even if it is a shorter one. I expect the stock market and the SPY and the DJI and many of these other major indices and ETFs to pull back to where they previously did back around the 21st to 23rd of March. I'd be very, very weary of entering the stock market unless you're entering a short position right now, personally. Now, let's touch on oil for just 1 second. As you can see, oil has actually bounced pretty heavily, and this is important because as we talked about in a previous video, go back on the channel and watch that, the oil market is worth nearly $2 trillion and dwarfs literally every single other metal market in the entire world collectively by more than double. The oil market is one of the most important markets to the global economy that there is. And luckily, as you can see on the daily chart, we've seen a pretty big jump in prices here. This comes as a glimmer of hope of a truce between the Saudi Arabia and Russia trade war going on with oil that we saw start about 2 weeks ago when oil prices jumped off the metaphorical cliff. We're not going to be touching on that much more in today's video because I'm Crypto Jeb and not Oil Jeb. So if you guys are interested, I encourage you to keep following the Saudi Arabia and Russia story as it has to do with the oil market. Very, very important one that I've been keeping my eyes on. Anyway, moving on here, let's finally wrap up with Bitcoin. As I mentioned in the intro, Bitcoin has actually been doing relatively well, perhaps only in a corollary response, but definitely at the same time that this news of the unemployment rate increasing has come out. As you can see, over the last 24 hours, Bitcoin has increased by 7.53% in valuation, almost back up to $7,000, which quite frankly isn't far from where we started, and that's at the same time that honestly one of the biggest bearish pieces of news that we have seen throughout this entire crisis came out, that unemployment number. That is huge. And that just goes to show you guys, on the big moves, Bitcoin does seem to be correlated with the stock market. If you look back on the last couple of years as Bitcoin has matured, it does seem to have some correlation with the stock market. But at the same time, they are decoupled and they are not as corollary as you might think. The U.S. stock market is collapsing right now, and it is probably going to pull back even farther. Bitcoin, on the other hand, is up nearly 10% on the day. As more and more people start to realize, hey, what's going on right now with the American response, with the rest of the world's response, it is going to cause inflation. It is going to cause your local fiat currency to be devalued. As the circulating supply of that currency goes up, its value is going to go down. People realize that, and people also realize, hey, Bitcoin isn't tied to any of these industries. It doesn't have feelers over here in the airline industry, in the oil industry, in the restaurant industry, and the NBA. It doesn't have connections to those. Bitcoin is free floating. It's in its own ecosystem. It is not really being impacted by the NBA being shut down or the airlines needing a bailout. The stock market is. And because Bitcoin is not directly connected to that, the only thing that really matters on Bitcoin is, one, is it legal? And two, do people have enough money to invest in it and continue to stay invested in it? That last one's going to be difficult for Bitcoin, but you also have to understand that it's going to be even more difficult for the stock market because you have more average Joes trading in the stock market. There are a lot of people in Bitcoin holding this market up who are whales and who are not going to go bankrupt or lose everything because of this financial crisis that we're going through right now. To be short, the foundation of Bitcoin's price is much stronger than that of the rest of the stock market because of the inputs on price action that we have and because of the people invested in Bitcoin. With all that said, let's get on to some technical analysis. Over the last few days, Bitcoin has bounced in response to hitting that uptrending level of support, sitting down here around $6,200. In fact, as you can see, we've bounced on it twice and managed to rally both times. Now, remember to a couple of videos ago, I said that there was a pretty good chance that Bitcoin would rally back up to $6,800 to $6,900. That's exactly where we are right now. And I also told you guys to be careful of completely writing off a breakout. I told you that there is a chance that it'll happen. Now, I did also say that I felt that Bitcoin would pull back and break that uptrending level of support, but please don't write off a breakout possibility. And as I'm making this video, and as I'm seeing how Bitcoin's responding to this unemployment rate, I am getting even more increasingly interested in the idea of Bitcoin breaking to the upside. It's something that definitely can happen, and every day that passes and I keep seeing things like a 7% rally while the stock market crashes makes me more confident that we might actually see a bullish breakout of this pattern that we've been in for the last couple of weeks. I'm not making a call just yet, but I am interested to see where this plays out. We only have another couple of days in this pattern before we are forced to pick something, so look for a breakout on this pattern right here in the coming days. You will be able to make a trade on it, but I do caution you to be careful on this breakout because this is definitely a wild card of a move that we have incoming. Now, let's go ahead and look at some longer-term technical analysis out here on the daily chart, and I want to show you a few different things. Number one, remember how it had rejected from the 20 daily exponential moving average? Not so right now. We did reject from it last time, but right now, should Bitcoin have a bullish breakout, it actually means that we stayed above that level. Right now, we are above it, which is definitely a good thing. Furthermore, looking down here on the oscillators, we can see that the RSI has had a very healthy and sustained uptrend over the last 2 to 3 weeks, and our MACD over the last 4 days has actually started to diverge bullish. Very, very good thing indeed. Moving out to the weekly chart, I also want to show you the MACD here because, as you can see, the MACD is actually converging bullish on itself. That is very interesting. Considering the state of the global economy, for the weekly MACD to be converging bullish on itself and for Bitcoin to not be crashing, that alone is a very encouraging sign. And furthermore, the RSI is rallying. It's sitting up around 42, which is the answer to the life, universe, and everything, as you will know, and it seems like it may continue to the upside should Bitcoin manage to continue this rally with a bullish breakout. We're just going to have to see on that one. Now, I want to be clear about this. Bitcoin is going to see more blood because of this economic turmoil that we are in right now, but I think the worst of this is actually going to be over in about 2 to 3 months from now, and I think that Bitcoin is going to be relatively good at holding itself up in that time. Bitcoin has been in a long period of pullback ever since $20,000. The people in cryptocurrency have them balls of steel, and we know how to hodl our coin. Just saying. If ever there was a time for us to be spreading awareness of the message of the all-important hodl, now would be the time to do so. The economic side effects of what's going on right now are severe. They are drastic. In fact, they're probably the worst since the Great Depression, but I don't think we're going to be in for 10 years of depression as we had seen in the 1930s. I think we're going to bounce back relatively quickly following a normal recession that might be between 12 and 18 months long. Everything is going to work out just fine, guys. I want to make sure you guys have your head screwed on straight because if you'll remember back to 2008, it did seem like the world was falling apart, and what followed was 10 years of the strongest economy in the history of mankind. We will beat this back, we will overcome this, and we will be better for it. So look forward to that day. Anyway, guys, before we wrap it out, I do first want to mention something, and that would be the Cryptocurrency Technical Analysis Academy, guys, because we have just started the April 2020 sale on the course. Many of you guys have been emailing me saying, hey, Jeb, is there a promotion going on? Is there any way that I can get into the academy for $40 off? Well, now there is. That will be in the description down below. If you guys want to learn how to do technical analysis in times like these and actually manage to be profitable when many people are losing money and learn how to protect yourself in these situations, you need to understand technical analysis and understand the language of markets. That is technical analysis. That is what we teach here in the Cryptocurrency Technical Analysis Academy, and that's why nearly 1,400 students have joined it over the last year and a half that it has been in existence. There are currently over 35 videos and over 11 hours of content in the academy, and you're going to get access to all of it by joining with the link in the description down below. Make sure to use that coupon code at checkout. Now look, guys, I can come on here at the end of these videos and put a ton of testimonials right here. I can have Taylor edit about 200 or 300 of them in. I have a folder full of them. I can do that, and everyone who knows anything about marketing would say that I should. But what I prefer to do is to tell you guys to join our Discord server, our free Discord server in the link in the description down below, and go talk to some of our real students. Join the main chat and say, hey, is anyone here in CT2A? Can I talk to you in person? Go do that and see what they have to say about the academy before you join. I encourage you to go talk to our students one-on-one where I'm not in the conversation, so you get an honest testimony, and from there you can make your decision about whether or not you'd like to join the academy or not. I would never sell you guys a product that I am not personally very proud of myself, and I think that shows through the course product that we have brought to you guys. There are several new videos that are going to be uploaded to the academy today. Those videos have been in the works for a while, and they are now going to be going up, and I'm going to continue to be producing new videos as this quarantine lasts even even longer. We'll be continuing to put those new videos out for you guys. Anyway, guys, that is going to wrap it out for today's video. I do hope you did enjoy today's video. If you did, as always, consider hitting that like and subscribe button. It really helps out the channel when you do that. Before I go, though, I do first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling.